protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
Welcome to the Money Unleashed podcast, powered by the Hoffman Financial Group. I'm here with Chris Hoffman as always. Before we get started on today's show, make sure you subscribe to Money Unleashed wherever you get your podcasts, and be sure to check us out on Sundays from noon to 2 on WSB in Atlanta. Now, Chris, I don't know about you, but I have found myself looking back on 2025 and wondering, where did all the time go?
Yep, blink and the years go by faster and faster.
Well,
and you're not that old.
Not yet.
Not as old as me. They go quicker. The older you get, they go faster and faster. But
I keep hearing that, and I feel like I can confirm.
Are you getting it?
My 20s and 30s are different than my 40s have been thus far. So, well, the end of the year is upon us, and we'll pontificate on that a little bit because it's time to make some resolutions for 2026. Just about everyone's going to make some sort of New Year's resolution. We may not want to call it that, but things you'd like to focus on or reassess or improve on for the new year. So let's focus on a few financial ones. Here's one to lead us off. Resolution number 1, optimize your portfolio. And we're here to help you with that, aren't we?
Yeah, absolutely. I mean, you've got to have your money working for you, and the markets change, and what the markets give us today, they may change and give us another option later that's better. So to not rebalance your portfolio, to not meet with your financial advisor, to not assess different new diversification strategies, different products, different investment types, you've got to keep your head on a swivel in retirement, or your financial advisor needs to keep his or her head on a swivel and bring these things to you. So ask yourself this question. If you have a financial advisor today, when you go in, is it the same old, same old, same old? Is it, here are your results, I think the stock market's going to be fine next year, we're going to leave the balance the same? Or is it minor changes? Let's take some of these games, move them over, protect them. Or is there a deep discussion about, hey, how are we going to outpace inflation if it takes off, right? That's the nervous button out there. Everybody's like, stock market's doing great, but we are concerned about inflation taking off. The Fed keeps lowering interest rates, but there are some other things in play politically that could up inflation quite a bit. So have you stress tested your plan to see what happens under a 5 or 6 or 8% inflation rate? I'm not saying that's the projection,
right?
But you have to be prepared for it. So you've got to optimize your portfolio to take advantage of what the markets are giving you, whether it's fixed income, dividend stocks, high-tech stocks, real estate, and there's multiple asset classes that you can basically invest in. So you've got to optimize your portfolio.
Well, let me walk you through a few different points that can go or speak to optimizing our portfolio. Number 1, a pretty straightforward one, is focusing on that overall investment mix. You want to have a good handle on that.
Yeah, and typically it's only 2. If you're in a 401k, you got basically stocks and bonds.
Right.
That's very limiting. So you have to focus on your overall investment mix. And I would say diversify into 3, 4, 5, 6 different asset classes altogether, so that if one of them takes a tumble, you've got 3 or 4 others that are buoying it, keeping it afloat, doing fine, and you don't panic and you don't have to sell out of that asset class when it's down. You want to buy when it's down, sell when it's up. If it starts to head south and you still like that asset class with your financial advisor, that's the time to hold it and rely on your other asset classes or other pieces of your portfolio to keep you happy and afloat.
And that's something diversification allows for, among other things. Now, something we always talk about that you need to be planning for inside your financial plan, or just in general, is the impact of taxes. Chris, we know that there are going to be taxes, what rates, what levels in the future. We may not have the crystal ball for that, but you got to have a tax plan.
Yeah, and I'm going to venture to say that there isn't one listener out there that has considered and analyzed the impact of taxes, meaning this: there's tax preparation and there's tax planning. 99.99999% of the population does tax preparation. They don't do tax planning. You basically hand everything off to your tax professional and you say, what do I owe? Which is turning over total control to the IRS. What you need to do, and we do it with our clients and for our clients, is tax planning. If we pull from this bucket of money and we keep it under this level, we will avoid this tax or that tax. And we can make up for that loss of distributed income by taking it out of this other bucket. That's why it's extremely important, folks. You need to have 3 buckets of money. Taxable, meaning it's already been taxed, and future growth or dividends are taxed at basically capital gains rates, or for fixed income, it would be taxed at income. So taxable accounts, tax deferred, that's an IRA, traditional 401k. That means you've invested pre-tax, growing it tax deferred. When you pull it out, it will be taxed as income. Unfortunately, a lot of you are way out over your skis on the amount of tax deferred investing you have. So that's number 2. Number 3 is tax-free. That's our favorite. We want lots of tax-free money. But if you've got a balance among those 3, you can generate a distribution plan that should maybe not eliminate all taxes, but it should really pull it back, and you won't be in a tax trap going into retirement.
Let me give you a 1-2 punch to kind of close out this resolution, because we've talked about the overall investment mix, we've talked about diversification, we've talked about taxes. Now, monitoring and rebalancing your portfolio is needed. That's one step, but choosing appropriate benchmarks so that you continue to grow that portfolio, those are a couple of things people want to focus on too, right?
That's another question. How many people listening are holding their financial advisory team accountable to beating benchmarks? I'm going to argue that those of you that have an advisor that's outside of Hoffman Financial Group haven't set any benchmarks. So you're just looking at the stock market saying, well, it's up 20% this year, and your financial advisor is telling you, well, we didn't invest like the stock market. Well, I'm watching it every day. It seems to be doing just fine on the S&P 500 and the NASDAQ.
Yeah.
But you don't benchmark unless your financial advisor is saying, yes, for this portfolio, we are benchmarking against the S&P 500 or the Dow or the NASDAQ, or this is a 60-40. It's actually very easy, folks, to find a benchmark. Go find an index fund that has the same percentage of equities versus fixed income that you have in your 401k. That would be assignment number 1. So you can Google it, 60-40 portfolio indexes, and measure yourself against that index. But if your financial advisor is not offering that to you, they are avoiding accountability, and they're taking credit for gains in the good years that may not be matching up against a basic index benchmark. So that's concerning, because if the market heads down, now you're probably going to lose close to the same percentage that the index benchmark lost, but you didn't get those gains in the good years. So you have to have benchmarks, largely ignored by most financial advisors because they don't want to be accountable to getting results and beating results in the benchmark that we've set for them. So get a benchmark from your advisor, or take it upon yourself to pull up, Google it, 60-40, 70-30, 80-20 index fund. That'll tell you how you're doing in your individual portfolio.
Accountability certainly is important, but how about resolution number 2, creating financial discipline? That sounds like a pretty key tenet as well. So committing to saving and investing programs during your working years, that's generally the best way to boost your net worth, help you achieve many of life's most important goals. But there are some steps along the way here, including calculating your personal net worth annually, projecting the cost of some essential, maybe big-ticket items, and, of course, that emergency fund, Chris. You can't overlook that.
That's right. Well, you need to basically, that centers around budgeting against your portfolio. So it's how much do you need to generate in take-home pay versus how much should you invest in your 401k or Maybe don't overinvest in your 401k, but create that tax-free account. Remember, I mentioned there are 3 accounts: tax-free, tax-deferred, and taxable. So don't pump all the money into your 401k and ignore being able to build some tax-free buckets and some taxable buckets. That's how to keep yourself in balance. That would set you up tremendously in the future for that retirement planning meeting with your financial advisor. I would live for a world where our callers came in and said, I've got 1/3 in tax deferred, I've got 1/3 in tax free, and I've got 1/3 in taxable. I'm not saying that's the perfect number. It depends on the client. But that would be shocking to me. Versus typically folks that come in, they have about 70% or more in tax deferred. So we've got to work really hard on how to unwind the potential tax trap you're going to face later in life with high RMDs or needs, because you're going to need to pull money out of that or have it generate income for you to live off of. So you're kind of boxed in a little bit. And the only way to create a larger box with less tax impact is to do it early. Get with a financial advisor, face the issue head on, admit that there's a tax trap coming. Dollars to donuts, I'm going to say we can impact that tax burden in a positive way for you.
Well, time is ticking down on 2025. Let the Hoffman Financial Group help you put together a full financial plan that takes all of these types of things into account, and one that's designed to help you navigate the highs and lows so you can create that dependable income that will take you to and through retirement. It costs nothing to get this type of planning put in place. Let's get started today. 404-341-6767 is the phone number, 404-341-6767, or unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.